Everyone, welcome to Smart Investing. It is 4:05 p.m. Markets have just closed. I was watching some stocks, and there was pretty much nothing good. To me, this was like a fake rally. Obviously, you have certain stocks, a good 10 stocks out of like the thousands and thousands of stocks. So, like I was saying, out of those 10 stocks, they are the ones that push up the markets, and they pretty much activate all these indexes. So again, just because those 10 stocks go up doesn't mean the stock market looks good. Because overall, again, it's a fake rally because the majority of the stocks were down. So I don't know why it seems like as if, things seem flat, then all of a sudden the NASDAQ is up. And just because of the NASDAQ going up, everything else is up. It's crazy. So anyhow, aside from that, we have the banking services sector that I'm going to continue. I'm literally like close to getting done. I mean, I think on my list left, I have in total, I probably have maybe, I don't know, maybe a good 50 left. That seems like a lot, but trust me, it's taken me 2 years to get this far to evaluate so many companies, especially in this sector. So 50 doesn't seem like too far out to me. It's actually getting more of a relief. I have way more videos to upload. I probably will make 4 more. I'll try to do them back to back before my family gets home, and we can do this. So again, I have 3 stocks for you guys. We're gonna jump right into it. Again, markets are closed. It is June 22nd, as you can see at the top of my page there. Sorry, you can see it up top, left-hand corner. So Thursday, June 22nd. Just showing you guys that, this is uploaded today, and this is not old news. This is not old data. And I usually don't upload, a week later, a few days later, and, trying to edit all these errors and whatnot, and then trying to be fake about certain things. So, 99% of the time, I don't even edit my videos. I just record them, talk, show the data that I have. I don't really show my performance. I keep that kind of hidden because, everybody has their own way of doing things, for one, and then I'm not licensed or insured, and I don't want to be liable for anybody else's losses. I know most times a win can seem very nice, but again, losses are expected and they should be minimized. So, everybody has their own temper and the way that they deal with things, especially losses. So, that's one of the reasons I don't like or I can't recommend certain stocks. The best I can do, like I always say to you guys, the best I can do is to help you build a watch list. And even though I don't say yes, I just give you the opportunity and the hint to appreciate the stocks that I'm giving you to add to a watch list. So, furthermore, let's just begin. First stock up that I have. So again, let me go over. I'm way out of whack today. First one up is ticker symbol WAL. The second one that I have that I'm going to go over is GWB. And then the third one I have is ticker symbol FUNC. So we're going to jump right into the first one. First one is up. So we have here ticker symbol WAL, also known as Western Alliance. It is at $35.39. Market cap is at $3 billion. So pretty respected on Wall Street. Volume is at 3 million. 52-week high and low. Very high range. That's very rare. what I would see uncommon, maybe $20 to $30 range. Anything close to 50 is rare. Anything between a $50 difference, that is just extremely rare. So this is actually a pretty unique company. Dividend yields at 4%. Earnings are close to 9. Dividend is at 1.4. PE ratio is at 4. Very, very, very undervalued. I haven't seen a 4 PE ratio in the longest. I've seen maybe sixes here and there or sevens here and there in the banking sector. Four, I think honestly, uh, I've seen so many companies I can't remember each piece of data, but I can honestly say I don't remember coming across the number four for a PE ratio in the banking services sector. So that is pretty huge. This is very, very undervalued. I think for the value quant rating, this will be definitely close to a 9, maybe above a 9. So moving on to the charting, we have here the 5 year. It is still under its 200 EMA. So the current 200 EMA I have it is at 64.37. That's what I have. Then we have here, looking at the last 5 years, it's gone up in 2021 and then obviously tried to stay flat right around the beginning of January, as you guys can see. And then all of a sudden it had that leg down right there. So that is actually a very big drop, and it has stayed flat ever since, I'd say, the last 3 months at least. So moving on to a shorter time frame, we're gonna go to the 1 year. So again, like I said, it's just pretty much staying in that range. And again, it's way below its 200 EMA. So do I like the chart? Not at all. Does it have potential? I'd say no. Can it do better in the future? Who knows? Maybe. We're gonna move on to again the. So we have here analysts, 14 analysts, rated this pretty much a 93% buy. And then the quant ratings, I can't believe this is very low at a 6. I disagree with this number. I think it should be way more than that. And then for the highest rating, though, it has rated growth at a 6.37. So overall rating 3 out of 5. I don't even know. We'll have to dive deeper into the financials, so we're gonna do that now. Q1 earnings they missed, and then Q4 they met their target. They missed in Q3 2022, and they just beat in Q2 2022. Moving forward in Q2 2023, they are expecting about the same estimates, and we'll see what happens. Moving on to the annual numbers in these indicators, we have 9.7 for 2022 earnings. Margins are very high, 41%. Look at this. This is insane. All these in the 40s. That makes sense enough for it to be in the the earnings per share for it to be about 8. I think those are the highest margins I've ever seen. So net income has even grown the last 3 years. I mean, this was a slight gain, but still, really, actually, the last 2 years, if you want to be more precise about it. Revenue, I would expect that the last 2 years growing. So I could see why this might be considered a growth stock. But given the circumstances, with the banking sector, it's highly unlikely. So let me see real quick. So we have 2.25, 13.6. Wow. So they are cash flow positive. Uh, they have 450, sorry, right, 450 million. I'm trying to count the zeros in my head because I don't want to screw it up. Even it's because when you're writing down numbers and then even if you miss like 1 0 or the comma or the decimal, and when you're doing all that, 1 0 can just throw everything off. So 450 million in cash flow. I'm glad they're positive. It could do a little bit better, even though they're growing the last 2 years. So I kind of get why they're doing pretty good. Let's look at the dividends. I'm sure they can afford a raise. So during 2020, they gave 25 cents. And then we have here up until 2021, they paid 35 cents. And then let's do 2022, they paid 35 cents. Then during 2022, at the second half of the year, so about August, they paid a 1 cent raise, so better than nothing. It's not that good of a raise, but better than nothing. And they look pretty solid. I mean, they seem like they know what they're doing. So for this stock, I'm actually shocked, to be honest. Again, if they had their cash flow negative or even close to zero, maybe be a deciding factor. But given the circumstances, since they're positive, I'm gonna say yes to this stock. I guess this stock will be fine to add to a watch list. Western Alliance. Next stock up, ticker symbol GWB. So we have here ticker symbol GWB. This stock is actually delisted from what it looks like. We have here back in February of 2022. Apparently they got delisted. We'll just look at the news if they have any. Nothing. So I guess they got rid of the news. There was a question here. Why would it get delisted? Let's see if anybody else can ask if this is why it got delisted. I hate going to the comment section on this app because everybody wants to be a show off. Everybody acts like they're winning money when it is proven that less than 10% of people that day trade are actually successful. And if they are, just because you win maybe a week or two, that doesn't prove anything because it's just showing inconsistency. If people have, I'll put it this way, if people have plenty of time to post comments on what they're doing instead of actually concentrating during a live session of auction in a live public stock market, while every single second and every single minute money is being made, and you're there dedicating your time to typing and posting and liking and whatever on these comments, that only goes to show that you're favoring your time by social media versus making money. So that's why I can tell, like, so many people, like, if they're so active on social media, I could tell they're just fake right off the bat. Because it's like, how are you posting during market hours when it's open? Fine, you might do it after hours, but you can tell um, a lot about somebody by how active they are in what they do. So, I mean, it's just a given. So, I hope you guys know that one of the main reasons I don't post videos every day is because I have a life, I have other things to do. I'll tell you what though, I'm an extremely busy person. Like, um, extremely busy. Uh, I I have like so much like to do. You know, I have family. I do these investment videos. I do investments on my own. I don't need to talk to somebody else about investments and get advice from someone because uh, I trust my own decision. I trust my data. I trust my research and development. I trust everything that I do because I'm an honest person, and I like what I do. I enjoy what I do, and I do it to the best of my ability. This is not something that can really be learned when it comes to working habits and work ethics or traits. This is something that pretty much you're born with. Either it can be improved or it's just not there. You know, things just don't turn over in one day. You know, it takes time to develop it, and consistency. Consistency is always key. So anyhow, I'm not getting any. I don't see any feedback from that. So anyhow, this stock has been delisted, so you can take this off the watch list. Moving on to the last stock, ticker symbol FUNC. So ticker symbol FUNC. I want to see something. Okay, so it is active. It's still in the public stock market. Just making sure it's not delisted. Ticker symbol FUNC. So a volume of 5,000. That is awful. Market cap is awful. 52-week high and low differential. It's pretty awful. Looking for about a $10 difference. Dividend yield 5%. Dividend payment 80 cents. Earnings per share 3.5. Not bad. PE ratio, another one close to 4, but it's at really 4.35 to be exact. Price book at 0.67. Decent numbers. Decent numbers for a $100 million market cap company. They're pretty volatile. You can see these whipsaws going up, then straight down, going up. Took this long in 2021. Obviously, it was a good year. Then down again, and then starting to shoot up, but it's still flat. So I don't. The chart is still looking pretty awful. Moving on to the analysis based on one analyst, he said a screaming buy for this stock. Highest rating for the quant is 8.56. That is the value. Can definitely agree. Overall rating 4 out of 5. I don't know about that. I don't like giving overall ratings. I just see it as I go. And it's not giving me estimates for the earnings or actual estimates previous. I mean, only Q1 in 2023. That's the only estimate it's giving me. But we're going to skip that. We're going to jump right into... actually, you know what? I was going to jump into cash flow, but I don't want to do that. Since we're here, it only takes a minute or two to look over this. ROA is crap. ROE is okay. Earnings have been doing better the last 2 years, so that's not bad. The net margins have been getting better for the past 2 years. And looking at their debt, pretty typical. Again, 91.8%, close to 92. Then we have here the operating cash flow, investment cash flow, and the financing. So we're gonna take a look at all these numbers, add them up and see what we get. So 130 out of 170. So they are negative 40 million. Negative 40 million. So for their net income, they still won't be able to use their net income to pay it off. They'll still be in the negative by a slight margin. They have potential to get better, but this year I just don't see it. They are. It looks like they're turning things around. They're trying to gain even more earnings, and it looks like their margins are getting better. So for this year and for this stock, I'm gonna say no. Hopefully things get better, and things will turn in a more positive direction for this company. So that's all I have for you guys today. Again, I'm gonna go over them. So Western Alliance, I said yes for a watch list. Ticker symbol GWB, I said no, and ticker symbol FUNC, I said no. And again, this one was delisted, GWB. Thank you guys for watching. I'll see you guys real soon. I'm going to take a little break and take care.